Joining us with his top 5 stock picks is Dan White, head of research at Blue Line Futures. Dan, so good to have you. Thanks so much for being here.
Hey, Caroline, thanks for having me. I appreciate it.
All right, so Dan, before we get into your top 5, first tell us, what's your process for finding stocks that still have meaningful upside from here?
So, we're a top down firm. All of our processes start from the macro standpoint where we work from the top to the bottom and we really look for secular catalysts. That's been our focus the past 2 years. And it's really paid off for us.
Break that down for us a little bit more. In a market that's near all-time highs, the catalysts are the most important thing to you versus valuation, earnings growth,
Well,
management, that type of thing.
right now in this environment, I think it's inflation expectations where we were really out ahead of the curve on inflation being underpriced coming into this year, but that has fully corrected. So, we're at a spot now where we almost see these forward rate hike expectations is overdone, but that's the key thing we're watching right now is interest rates and just these inflation expectations. Now, the underlying catalyst, if you look at what has outperformed, not only in the U.S. but globally, it's generally tied to one of these big underlying themes. So AI, you have military spending, a little bit of reshoring, but that's really been our focus is these big underlying catalysts. And honestly, economically, there's really only been one thing to invest in this year, which has been, US tech. So that's kind of where we've been at. And we'll dive into what we've kind of been doing to rotate out of that a little bit.
Yes, so the first pick that you actually are bringing to the table is not US tech, it's Eli Lilly, and it's already a trillion-dollar company. So what
Yes.
gives you confidence that the GLP-1 story isn't already fully priced in?
So, I mean, Eli Lilly, past 3 weeks, we've been rotating out of some of our semi names and more into healthcare, financials. So, Eli Lilly, this is a secular trend. These GLP 1s, obesity, there are a lot of beneficial ripple effects that are coming from this technology. And Eli Lilly dominates this space. Um, their investment, their capex has really set them up where they can manufacture these three GLP ones that they have coming to the market are manufactured on the same platform. So, I mean, their manufacturing platform is the most advanced in the space, which gives them enhanced flexibility and just a leg up on margins. Where their GLP 1 oral drug, they're talking about getting that into emerging markets in the next 3 years. So, their cost advantages are pretty significant.
Okay, so you said you're rotating out of some of the semi names to move into healthcare and financials. Just quickly, give us a few of those semi names that you're taking profits on.
I mean, we've been overweight Micron for a year and a half, so that got up to a 6% position in our book. That was just too much. We really went overweight the semis in April, so very heavy Nvidia. We're rotating out of some of that. Broadcom is another one where we still think they're great stocks, but at some point you need to rotate out, take profits. And we really liked where healthcare was at. And then we really liked financials from the story of the yield curve expanding.
Okay, so regional banks, though, have not exactly been market favorites this year. Your next pick is Huntington Bank shares. So, what is Wall Street missing there? And does the thesis still work if rate cuts get pushed out?
Yes. So I like Huntington. I mean, it's a great bank, great CEO. Um, they're principled lenders. And so the street really didn't like their moves into Q1. They built liquidity, and their loan growth slowed down. So people took that as a negative. But to me, I took it as a sign that potentially, the environment was just not conducive to growing the loan book. When people think rates are coming down, there's a flood of money on the street. So they built liquidity. They kind of tied back how much they were lending, and now we're in a situation where rates have risen, fairly drastically. So they're going to be sitting pretty here over the next quarter.
Okay, next up is Cheniere Energy, ticker symbol LNG, one of the biggest liquefied natural gas exporters in the world. But the stock is already up more than 20% this year. Why isn't the opportunity gone?
I mean, LNG and US natural gas to me, that is a long run secular catalyst. So the cost advantages we have in the US of our cheap gas and cheap electricity is, something that can drive investment in an outsized IRR for some time. Uh, with this oil shock and the shift in China to more, high tech, high end manufacturing, I think that China's gonna rely more and more on LNG. And then at the same time, you have Japan, where Japanese manufacturing is coming alive and really showing life for the first time in, 20, 30 years. So if you look at those JKM swaps and that LNG into Asia, that's starting to really, get some juice. So I'm fairly bulled up on Japan. I've been bulled up on the yen all year, dead wrong. So it's LNG to me is really a play on Asia that's, less risky than necessarily investing there.
Okay, next up is Kinder Morgan, sticking with the energy theme. Energy infrastructure has kind of quietly been one of the better performing areas of the market. Why does Kinder Morgan still have room to run?
Yes, absolutely. So Kinder Morgan, great business. I mean, it's simple. If we are going to build these data centers and we are going to have this AI revolution, we need more electricity. We need more electricity, more power. And in the United States, the way we can do that most efficiently is natural gas. So to us, it's kind of that same type of thesis where it's attacking AI and then leveraging US natural gas cost advantages.
And finally, your AI play, Tempest AI, which is actually down this year pretty significantly,
Yes.
while other AI winners have surged. Why buy this and rotate out of Micron and Nvidia?
Yes. So don't look at the chart, just listen to the story. So it's the founder of Groupon, some tech guys. They have been Their focus has been oncology and diagnostics since 2015. So they came into the medical space kind of from that tech side. So they approached it very differently. It was more so big data, data analytics, and now they have this AI headwind. So when it comes to oncology diagnostics, they're very, very unique in how they're attacking cancer. Um, their moat on these clean data sets is very, very significant. And they're at the point where they're about to turn the corner in profitability. So don't look at the chart, but it's a great company. It's a space where I think AI is actually underhyped, is if that's a possibility, is the advances that we can, really make in healthcare. So it's specky, you got to size it correctly, but I think this could potentially double, over the next 12, 24 months.
Okay, so look at the chart in 12 to 24 months then. You made the
Maybe,
case for picking
maybe.
these 5 names. All right, not your highest conviction pick, but we'll get to that in just a second. You made the case for owning these 5 names, but why own these 5 names instead of just investing in the S&P 500?
So, it's a good point. I mean, realistically, when you guys ask me the question, 5 stocks, my head instantly goes to what's within our portfolio. The energy space to me is just very, very attractive. On the downside, we always need energy, right? These conflicts in the Middle East are only giving US producers, uh, you know, a margin bump. And that's on the downside. On the upside, if this AI revolution does go, energy is going to be a leader for the next 5 to 10 years.
If the AI revolution does go where? What
Because
does that mean? Go away?
not go away, but I'm saying if this build out continues and everything comes to fruition and all of these data centers that are planned are actually constructed, the electricity use in the United States is going to be, I mean, drastic. So we're looking at a supply and demand gap that's going to give these energy guys in the US very significant cost advantages. Like if you look at Duke Energy, I mean, their data center and power, percentage of sales, it's going to 18% already in like 2 to 3 years. They were almost entirely residential 3, 4 years ago. So these data centers are coming and we need more electricity.
Okay. All right. A great time to pivot to our rapid fire round. So we have
All right.
quick questions, quick answers. Are you ready?
I'm ready.
Here we go. Highest conviction pick.
Ooh, Eli Lilly.
Of the 5, which is most underrated?
Most underrated. That's a good question. Um, KMI.
Which is the biggest AI beneficiary?
I think you'd have to go with Tempest. I mean, having this type of tailwind behind them is significant. It's going to change lives, hopefully change the world. So something like that, I like investing in it.
Better energy play, Cheniere or Kinder Morgan?
Oh, Kinder Morgan, I would have to say. You're too tied to outside markets in Asia with LNG, but I still love the play.
If you could only own one of the five for the next decade, which is it?
Oh, that's tough. You're killing me. Honestly, KMI.
Which one doubles first?
Ooh, out of all five,
Yes.
Tempest.
Which one would you buy tomorrow morning?
Tempest. We're already too overweight some of these energy names. So,
What's the sixth stock that almost made the list?
oh, a lot. Some Japanese manufacturers I really like. Mitsubishi Heavy, Kawasaki Heavy. Japan has some significant tailwinds where they manufacture a lot of the components that we need to really build out these data centers and the electricity grid. And they have this defense tailwind, which is another secular catalyst.
All right, we'll leave it there. Dan White, head of research at Blue Line Futures. Thanks so much for your picks and for playing our rapid fire game with us. Really appreciate it.
Anytime. I appreciate it.
If you liked this video, check out our full interview with Jed Ellerbrook. He zeroes in on 5 mid-cap stocks set to outperform.